we heard Elon again reiterate that they're going to do a wide release of the full self-driving beta software to North American customers. So that signals confidence in that platform, which, by the way, we think is a multi-trillion-dollar market in the next 10 years.
He didn't seem to have any demand fears. Any fears that he talked about are still supply concerns. Is he right about that?
I would be much more concerned about the companies that have the majority of their revenues dedicated to gas-powered car sales.
They should be approaching 2 million units in production rate exiting the year, with both Austin and Berlin ramping. That's a phenomenal production rate. I may be a loud-voiced bear on Tesla, but I actually drive an EV. I think the momentum in the market is real. Tesla is the category king. You know, honestly, I see the Tesla Semi almost as a bad joke.
In this video, the subject of your simp fantasies hypes up the Tesla Robotaxi platform and the multi-trillion-dollar opportunity it will unlock, and the irony of all ironies. A long-term Tesla bear calls the Tesla Semi a, quote, bad joke. You want to see an actual bad joke? Craig Irwin's recommendations on Tesla stock over the last 3 years. Yes, that's right, the internet never forgets, Craig. October 29th, 2019, with Tesla stock under $20 a share. He says sell. November 18th, 2019, Tesla at less than $24 per share. He says sell. November 22nd, 2019, still under $24 a share. He says sell Tesla stock. January 29th, 2020, a new year, but no change in the stupidity. Sell Tesla stock at around $42 per share. In May 27th, 2020, sell Tesla stock at around $55 per share, then miraculously out of absolutely nowhere changes his mind to hold after Tesla stock approximately doubles. Just after he said sell, then it doubles, and now he's like, well, actually, you just hold, I changed my mind. Another hold as Tesla stock breaks $100 a share. Another hold closer to $300. Hold. Average return for Tesla, negative 59.89%. That is a bad joke. Speaking of recommendations and bad jokes, what a segue. If you'd like some bad jokes, I recommend you join Patreon with the card in the corner or the link at the pinned comment. Bad jokes for days, maybe one or two that you might actually laugh at, loads of exclusive content, plenty of stuff that'll get me cancelled, and instant up-to-date access to my Tesla stock price targets. You know what to do by now.
And you're pretty bullish, I think, Tasha. Does it have to do just with EVs? And I think, in your view, it may be single digit, but Tesla will remain the market leader because they're spending more CapEx than even their competitors to stay in that position. So that's one thing.
Exactly, right. So electric vehicles, are just single digit percentage points of overall auto sales. So we have to remember that it's still an early market. But we do definitely see Tesla as one of the market leaders, both in electric vehicles and in autonomy, right? Because they use their customer cars to capture data to train their neural nets. And actually, last night on the call, we heard Elon again reiterate that they're going to do a wide release of the full self-driving beta software to North American customers. So that signals confidence in that platform, which, by the way, we think is a multi-trillion-dollar market in the next 10 years.
So help me out here, guys. I think she just said Tesla, market leader in autonomy, and then went on to say the autonomous opportunity is a multi-trillion-dollar opportunity over the next 10 years. I just have two questions. One, how much is a trillion, and is a multi-trillion more than a trillion? And two, does she mean in the next 10 years, as in over the next 10 years? Because if that's true, Tesla, market leader in autonomy, and autonomy a multi-trillion-dollar opportunity, would that then not suggest that Tasha Keeney and ARK Invest believe that Tesla's going to capture a gigantic slice of a multi-trillion-dollar opportunity over the next 10 years? And if that's true, how do I buy Tesla stock? Let me know in the comments below.
The robotaxis, and that's really going to happen. That's going to happen. And
sorry to interrupt here, guys, but I think I've noticed a mistake on the CNBS infographic here, because it seems to suggest, as we can see on screen now, I think they've got a typo. Tesla 67.4% US EV market share in the first 3 quarters of 2022. Second place at a mere 8.1%. I think they must have moved a decimal point in the wrong direction. Obviously, Tesla's actually at 6.74% market share, because as we know, the competition is coming. Not all over themselves, but for Tesla. So can somebody let CNBS know they made a massive mistake here? Almost looks like Tesla's in a completely dominant position and embarrassing the so-called competition, which is obviously not true, because all the experts have been telling me the competition is coming starting 10 years ago. So obviously it's already come now, right?
When he talked about a next generation vehicle that would be half the price of the Model 3 or the Model Y, you think he's referring to the robotaxi there. So he may have said it too early, a year ago, 2 years ago, but it's real and it's coming.
Yes, and they've committed in previous calls to mass manufacturing of a robotaxi specific vehicle. So I could think I do think it could be that car. And again, I think that manufacturing commitment is pretty meaningful because you can promise full autonomy via software all you want, and if you're late, people are still buying your vehicles. But actually, if you commit to capex and actual production capacity, if you're late on that, that's a very costly mistake. So I think that just signals their confidence in this platform, which could totally change the business model. We think this will be a high margin recurring revenue services like model.
Really, all those things. In terms of the current environment, recession fears, he didn't seem to have any demand fears. Any fears that he talked about are still supply concerns. Is he right about that?
Yeah, and I'm seeing as I read other articles and analyst opinions that I think there are demand fears out there. I think that they're unfounded.
So I just want to be clear, ladies and gentlemen, there is no such thing as well-founded fears for future demand for compelling, reasonably priced electric vehicles. If you hear anyone suggest otherwise, they do not know what the they are talking about. Just imagine instead of them talking about concerns about EV demand or what if this, that, or the other, rewind the clock, give or take about 100 years. This is the same idiotic statements you might have heard from morons who are covering the horse and carriage industry in the past as the automobile, the extremely expensive, high-end, only rich people can afford automobile. There's concerns about future demand for the automobile. People are going to want to continue driving their horse and carriage. Driving a horse and carriage? I don't even know what the you do. Do you drive a horse and carriage or do you get driven? I don't know. Anyway, by the way, shout out to the early autonomous vehicles. We've come a long way over the last 100 years. Tesla FSD Beta is still not on par with a horse, although it does shit less. I have debunked these claims about uncertainty around future EV demand a trillion times. Let me be clear, on the record, one more time. It won't be too long before every single new vehicle sold on planet Earth is electric. This is a disruptive, innovative technology. We've reached the tipping point. There's no turning back. The economics now make this a certainty. The total cost, the lifetime ownership cost of an EV today is significantly less than an internal combustion engine vehicle, due primarily to much lower maintenance costs and, more importantly, much lower cost to recharge versus refuel. And we're almost at sticker price parity, at which point consumers will literally need to be suffering from brain damage to choose the inferior, more expensive, polluting, less safe ICE vehicle over the literally superior on everything that matters electric vehicle. Some people still do not grasp these very basic facts, but they are facts.
Again, I would look at EVs as a percentage of overall auto sales. They were something like 7% of total vehicle sales last year. So, and as we saw gas-powered car sales decline in the past couple of years, we're still seeing EVs up on a year-over-year basis. I mean, we saw Tesla's revenues alone grew 50% this quarter. So I would look at that and for like macroeconomic concerns, I would be much more concerned about the companies that have the majority of their revenues dedicated to gas-powered car sales.
So I believe what Tasha Keeney just said, and this is an absolute direct quote, I swear, was the vast majority of legacy automotive manufacturers are unequivocally f***ed. Most of them will be bankrupt before the decade ends. And those that do survive will be a shadow of their former selves, producing a fraction of the EVs per year that they were previously producing and selling ICE vehicles. Of course, I can't say that because I work at ARK Invest and disclosures and all sorts of shit. I can't really be too specific, but I'm trying to tell you guys without saying it directly. They're all f***ed. Please listen to me. Thank you, Tasha, the subject of your simp fantasies. Direct quote, I swear. Because
that's what we think is going to decline in the future as EVs become more cost competitive thanks to Wright's Law. So Wright's Law forecasts battery decline costs very well. We think it's coming down at roughly a 30% rate for every cumulative doubling in production.
So this is an extremely important part of the EV adoption thesis, something that obviously has not yet penetrated the domes of a single EV skeptic or a single Tesla short seller. Let's do some really quick math to understand the implications of what Tasha has just said. Okay, so... not sure what that is. Someone must have hacked me. Sorry, guys. Some weird person has put all these things on my computer that I didn't put there myself. Hang on, where are we? Oh, there we go. Calculator. Great, cool. Yeah, editor, just make sure you get rid of that. It'd be a little bit embarrassing. So where were we? Oh yeah, that's right. Numbers, implications, cost declines, predictable cost declines. We're going to use Tesla's end of decade goal, their stretch goal. Doesn't mean they'll get there, but they're aiming for it, of 20 million electric vehicles produced in a single year. Let's just call it 2030. Let's work back from there. So we've got 20 million divided by 1.5 million, which is roughly what Tesla will produce this year, 13-fold increase. Now, I'm not very good at math. That's why I'm using a calculator, but I believe that there's more than one doubling between 1.5 million and 20 million. Let's just make sure. We'll work the other way. 1.5 million. Let's times that by 2. Double it once. 3 million. Double it again. 6 million. Double it again. This is 3 doublings. We're now at 12 million. And double it one more time. We're at 24 million. So that was 4 cumulative doublings. Is that correct? Yes, that's correct. Let's continue to play along at home, folks. Let's just say today that it cost Tesla $35,000 to produce, this is to produce, not the sale price, to produce a compelling electric vehicle. We heard Tasha say 30% decline in costs for every cumulative doubling. See where we're going with this? That's right. So let's see what happens. Let's knock 30% off this for the first cumulative doubling. Now we'll knock another 30% off for the next cumulative doubling, and another 30% for the next cumulative doubling, and another 30% for the next cumulative doubling. Seems kind of ridiculous, doesn't it? Imagine in 10 years, give or take, Tesla able to produce a compelling electric vehicle for less than $10,000. Sale price, let's call it 13, 14, maybe 15,000 bucks. Huge profit margins. Now, of course, this may not turn out to be the case. Maybe it's only a 25% decline or a 20% decline. But the point is, the idea that costs will predictably decline over time as production doubles and doubles again is on point. There's a few reasons for this. Economies of scale are a big part, but so too is the amount of future innovation that will occur in the manufacturing of electric vehicles. Remember, this is a brand new technology, and there are so few moving parts in an electric vehicle compared to an ICE vehicle, that there is a very clear path to more than halve the cost to produce compelling electric vehicles over the next 10 years. Maybe to slash it by significantly more than half. And remember, we already talked about price parity. Electric vehicles today are almost the same price in terms of the sticker price, the purchase price, as an equivalent ICE vehicle, range, features, functionality, and so on. And that's today. Imagine in 5 years, 7 years, 8 years, 10 years, when they're significantly cheaper. This is the whole point. ICE vehicles are fucked. EVs are the future, the transition is happening, and this is inevitable, and this is a core part of the thesis. The cost of EVs will continue to decline. Once they reach sticker price parity with ICE vehicles, the price declines don't stop. They will continue. EVs will then be a little bit cheaper than an ICE vehicle, then a lot cheaper, then significantly cheaper, then embarrassingly cheaper, and so on. Now, there may be some skeptics out there who really doubt the possibility of such insane price declines, and you are welcome to be a skeptic, but I would also suggest maybe do a little bit of homework. I don't know, some similar disruptive, innovative technologies that were early and have progressed a little bit. I don't know, maybe like computers would be a good starting point.
That's what's going to bring sticker prices down and drive demand.
Now, just in case there are any Tesla Q virgins watching, I'm just kidding. I know there's a couple. You guys love to hate me. I see you in the comments. I read them all. I just want to make sure that you understood this, okay? It's very complicated, I know, so we'll have to take some time to explain this, right? Ready? If the price goes down, the demand goes, fill in the blank. And I don't mean your head. Price goes down, demand goes up. And if you don't know, spoiler alert, over the next few months, quarters, years, and yes, decades, the price of EVs will go down. So the demand goes, fill in the blank once again.
Yeah, I know there was a little too much optimism about pricing, the follow through from the pricing that was put in the second quarter, lifting the top line and bringing that possibly in line with original expectations. Margins missed by roughly 50 basis points. Clearly top line missed because of this. And, they put through the right amount of price to pass through the increased costs that they're seeing. They're not being greedy. They're pricing the vehicles appropriately such that they can sell them in volume in the market. The problem is they did miss by 19,000 in the quarter. Heck, I remember back in the day where 19,000 was a daydream for Tesla as far as deliveries in a year. But that's not what counts now. They missed, and expectations were too high. Oh my gosh! I think the biggest question for investors is how much stock does he have to sell to fund his Twitter acquisition? I mean, kind of depends where he parked his cash, right? 15 billion he sold. He could have done well, or he could have done not so well. And it could be anywhere between $5 and $10 billion worth of potential equity sales. That I think is really going to weigh on sentiment for investors until we get clarity. Other than that, the guide for units in the fourth quarter is going to be incredibly important. They should be approaching 2 million units in production rate exiting the year, with both Austin and Berlin ramping. That's a phenomenal production rate.
So Craig's right on both counts. Tesla's annual production run rate will be 2 million units per year in no time at all, and that is a phenomenal rate of production. And interestingly, from that point, Tesla only requires a 10x in production to hit 20 million units per year, or a 5x in production to be around 10 million units per year, which is about the best any automotive manufacturer has ever sold in a single calendar year. It was just a few years ago that everyone was pointing and laughing at Tesla. Oh, the joke of a company. They sell 2 cars every quarter. What a joke. We see this is the thing about exponential growth and a disruptive, innovative technology. In the early days, selling 3 cars and then 12 cars and then 58 cars, then 1,022 cars and then 2,080 cars and then 5,073 cars and then 10,042 cars and whatever, who cares? Next minute, you're at 1.5 million, then 2 million, then 4 million, then 8 million, then 10, then 20 million. In a blink of an eye. People don't see this coming.
We've got to see the demand there and the confidence that they could serve that demand. And, that'll also have a big impact on the stock. To talk about the stock, though, I think the bigger impacts exiting this year are things like Porsche, success at companies like Polestar, and obviously the upcoming Ford spinoff. Those are really impacting investor sentiment as they look at things that are potentially much better valued with similar or maybe even more attractive growth prospects.
He's definitely absolutely 2,000% correct on this. There are plenty of other EV opportunities in terms of stocks related to companies that have much better growth prospects than Tesla, who are only looking to increase their annual production by around 15x over the next, call it 8 years. Such companies would include the likes of the Real Company, Nikola, not a fraud, not a vaporware, not a stock pump. We're making legitimate hydrogen trucks, out-Eloning Elon. Government Motors, led by one of the greatest CEOs of all time, who also led and mattered, according to Joe Biden, or at least his scriptwriters. Toyota, the world's largest automotive manufacturer today, who've definitely been moving aggressively toward EVs and aren't going down any dead ends. They're not pursuing multiple propulsion strategies. And if you disagree with me, well, you're an Elon fanboy. So I think what Craig is trying to say is Tesla is the worst risk-adjusted opportunity in the stock market, in his opinion, or something like that, I think.
Great, let's talk about pricing power, because Tesla's cars sold for an average of $57,000 in Q3, up from $49,000 just a year ago. They have been able to pass along those higher prices to consumers. You mentioned the demand aspect of this. Any worry that that's no longer going to be the case if we do see a bigger slowdown?
I'm not worried about demand. I see EVs as inevitable. I think, EVs are going to be an increasing mix of transportation, no matter what we have to do for price, because of the technology integration of the vehicles. I may be a loud-voiced bear on Tesla, but I actually drive an EV. I think the momentum in the market is real. Tesla is the category king.
If I didn't know any better, I think this guy was a closet Tesla bull, just too afraid to come out because his peers might laugh, mock, and ridicule. Of course, that's definitely not the case. He believes everything he's saying, and the fact that he's describing Tesla as a category king, EV adoption as inevitable, praising Tesla's technology and their lead, irrelevant.
And that makes it a difficult path for them to continue to blaze when so many very well-resourced companies are coming right behind them.
So the shares are still down 45% year to date and down almost 20% since they slightly missed deliveries. What's the next catalyst to get that stock moving in that direction? And how significant is the Tesla Semi, which we just mentioned, begin delivery in December?
Honestly, I see the Tesla Semi almost as a bad joke.
You heard it here first, ladies and gentlemen. Tesla Semi, a bad joke, as opposed to Craig Irwin's reputation and career predictions in particular on the company he's currently discussing and whose products he's currently describing as a bad joke.
Right, because the battery in there, the more range you need on this thing, the bigger battery you have to have, the less cargo you have. So, it's catch-22. Either you have range or you have cargo. That's, the business model of a Semi is to have cargo. So, I see that as a much better match for hydrogen if people really want an advanced drivetrain technology.
Look, I'll skip the physics lesson today. Hydrogen is a fucking joke. Sure, if it grew on trees, you could just pick a little bit of hydrogen, stick it in a full cell, off you go. Great. Not that simple. Again, we'll skip the physics lesson. But irrespective of that, for Craig to suggest that Tesla Semi is a bad joke is unbelievable. In the United States, more than 80% of all trips by semis listen closely, more than 80% of all trips in a semi are less than 250 miles. The entry-level Tesla Semi has a 300-mile range. There's also a 500-mile range option. The Tesla Semi will be suitable for significantly more than 80% of all semi trips in the United States. This doesn't sound like a bad joke to me. Far from it. What is Craig talking about? I mean, this is a fundamentally important piece of information. If this weren't the case, if, I don't know, 80% of all trips in the United States in a semi were more than 500 miles, this would be a dumb idea. But Tesla's done their homework. Craig clearly has not.
I don't know. I mean, I've met with the man that's the largest piece of the Tesla order book. I think there's going to be a very realistic calibration of these vehicles after they're brought online, after they're commissioned, and the actual sales rate might end up disappointing versus what some of the more aggressive bulls would imagine on this vehicle.
Craig, let's talk about supply chain, because it was one of the supply chain bottlenecks and remaining a immediate challenge. That's what Tesla said in its earnings release. I'm curious from your checks, just the improvement that we have seen there. They did note that they are seeing some improvement. I guess, how much improvement are we seeing, and how long do you think it's going to be until we're able to resolve these issues?
So a key piece of the supply chain for Tesla is actually Wolfspeed. Wolfspeed had been a little bit behind on their wafer deliveries to both STMicro and onsemi. I think some of the upside we've seen in Wolfspeed over the last 2 quarters has come from the catch-up, as they've brought on additional manufacturing capabilities in 6-inch and wafering capabilities there. So that I see as a key component. There obviously, connectors can be a major headache. It could even just be harnesses that you outsource these days. So it doesn't have to be an exotic high technology piece of the build. And everybody's having these problems. Nobody's immune. But I would say that I think Tesla's probably doing one of the best jobs of the companies in the market as far as managing their supply chain.
Fair and true, but of course, this is totally irrelevant. Tesla's ability to almost seamlessly navigate incredible supply chain challenges, logistics issues, that doesn't matter. Why would that matter? What's that got to do with anything? It's not like that's going to give Tesla an absolutely insane advantage in continuing to navigate the global supply chain challenges, the logistics issues, and most important of all, it's definitely not going to help them to continue to accelerate their lead, to extend even further, to outpace their competition, to grow faster than anyone attempting to catch up with them, and continue to maintain their totally dominant lead. Oh, and speaking of total domination, I guess this would be a good time to reveal my secret master plan, part 1. Step 1, create so much compelling content, add so much value that it becomes simply impossible for anyone to resist joining Patreon by clicking the card in the corner or the link at the pinned comment. And 2, continue to add so much value, so much exclusive content that I make an absolute mockery of everyone else on the Patreon platform. Shots fired, motherfuckers. And I want to be clear, I'm not fucking around. This is now on the record, and I intend to follow through. It's only a matter of time. Let's take this motherfucker over. So, see you over on Patreon. Love ya.